Ha 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 ha! Ladies and gentlemen, it's me, NYSEinstein, from the floor of the New York Stock Exchange. What an odd and crazy day, right? It's a Monday. I'm a little bit confused. It's not the most exciting day ever, although there is some information that caused the market to move the way it did. Market opened up, bobbed and weaved all morning, up 30, down 40. People are sort of assimilating the quarterly end news, earnings. You know, as I said last week, it appears from the earnings that the health of the economy is not particularly that good. But the market still feels like it's almost in overbought territory. Because why are we back up here? Why did we rebound? It's not even a question why we rebounded. We know why we rebounded. Oil hit a low. We had that problem. We've had the Fed news and all that. So let's not even discuss yesterday's news. Let's stay in the day. It's not that important why we rebounded. I go through that with you on a daily basis. Let's talk about where we are and whether we're going to stay here and why we are where we are today. That is a mouthful, baby. That's a freaking mouthful, yes. Hello, Germany. Anyway, the market bobbed and weaved all afternoon. We ended up getting a nice, solid buy program. So we do have money on the sidelines. We do have people with shopping lists ready to put money to work. If I was an investor, there's some places here where I would feel like this maybe, I think this market net goes higher, okay? Although, from the analysis I've done today, the big bets are that's not going to happen. So let's see what happened. $1 billion buy program came in midday. Market was up around 15 or 20 points. Boom, we spiked up to about up 70. Clearly, from the interest that came down to the floor of the New York Stock Exchange for the close, we did have a rally in the market. Money being put to work. Buy program came in. Then what happened? Wrong. Shooting at the Capitol. Capitol and White House in lockdown. Fear mode sets in. This market sold off hard. Completely coincided with the news out of Washington. People are obviously in deep fear mode about terrorism at the moment, about what's going on. It is a major problem. It is a major problem for the markets because that fear of what's going on around the world, homegrown terror plots, fear, suspicious package in Times Square, railway stations in lockdown mode, the Capitol in lockdown, White House in lockdown, shootings, people are in fear mode. So at this point, we're in that mode where the market is sort of sitting in its fragile. People are waiting around for the next shoe to fall, and boom, 215. News comes out. Market sold off hard. We ended up flat, possibly negative. The minute everyone assimilates that news, how much effect does that have in the marketplace? Wrong, zero. Market rallied back. The buy program pared down, flipped to a sell side. The market ended up selling off into the close. So what does it all mean? Apparently, okay, so if you guys know about the VIX, VIX is the volatility index. Okay, the VIX is at a low. It usually bops between $12 and $20 or $30. It's gone even to the 40s when we've had this volatility since August. Right now, it's at a low. When the market goes down, but when the VIX go up, market goes down. Which comes first, who knows? But that means that there's volatility in the marketplace. It's usually in a big directionality play. Okay, so the option play on this VIX is, VIX are at a low. The bet is that there's going to be a big sell-off because the calls are expensive. The puts are super cheap. The bet is that the VIX are going to go up. And that means that people are betting the market is going to go down. We're toppy. We're in the mid 17,000 range. We're at the end of the first quarter. I don't know what the bet is. But for today, we had a choppy market. We had some geopolitical madness going on. We did have some crazy stuff coming out of Washington. Tomorrow's another day. We're coming to the end of March. Let's see what happens tomorrow.